Sanjiv, hi, morning. Good to have you on the show as always. Sanjiv, what is it that you're making of the regulators' commentary now on the lump sum investments into small and mid cap funds and how it's going to spell out into maybe sentiment, some bit of profit taking even further within small and mid caps?
Yeah, good morning. Aisha, we've been cautioning you from the last 1 month that these stocks have run up very, very sharply ahead of fundamentals. However, the problem is the entry and exit. The impact cost is high. When you try to enter these stocks like mutual funds did, then they already rally, in the form of that. And now exit becomes a problem because most people are stuck at higher levels. I still think the small cap index needs more cooling down, needs more rationality, and that is why large caps are giving you that opportunity. Mid caps, like you pointed out, have not corrected as much, maybe because of better fundamental. But this is a consolidation phase. I don't rule out further deeper corrections. Yesterday we saw the sheer weight of Reliance and HDFC Bank, which brought down the index sharply, and these bouts can continue. We remain in a bull market, but fundamentally and technically, we are now reached a peak from where we can see some consolidation stroke correction. In the broader market, that can be more deeper. And that's why we are saying stick with the large caps. That is where you should be. Because the caveat remains not trying to time the market, but spending time in the market. And in that context, it should be 70% large caps in your portfolio.
Let's have that list. We already know that ONGC is a favorite amidst large caps. What else, Sanjeev, within large caps are you recommending?
Yeah, so Aisha, if you just see, the rupee has started to strengthen very, very well. And that reaction of the rupee is actually caught most people on the wrong side. I think OMCs, particularly IOC, HPC, I am very bullish. And as a disclosure, ONGC, IOC, HPCL are we think they are giving you a very good shot because if rupee starts to strengthen, then their margins automatically get benefited. Plus, there has been no tinkering on taxes as far as elections or other things. There can be a little bit of a 100 rupee fall in LPG prices, which is absorbed. But I think HPCL, IOC are giving you an entry point. These are going to report record numbers, and I think that is where you can see more color. Secondly, yesterday, if you saw against a weaker dollar, which I think is headed lower, commodities are doing well. Yesterday, nickel zinc hit a 3-month high, and I think nickel zinc copper give you the perfect opportunity. So we are using this fall to make a sip more in Vedanta, which has been our topic, and we are also adding Hindustan Copper. Hindustan Copper is the 5th largest copper player in the world, and the sheer weight of copper is now adding up. It is the only player in the country which has copper reserves, and that is what it takes 30 years to create that. So I think Hindustan Copper, even though it has rallied sharply at 265, gives you a very good opportunity. We are long on this stock. We think this can easily head to 350 over a period of time.
Sanjeev, on any of these stocks that are on Citi's radar, HDFC Life, for instance. We've recently seen some brokerage notes as well on the space as a whole, or Paytm perhaps?
Yeah, good morning. All the three insurers, HDFC Life, SBI Life, and ICICI Pru, we had a buy on them when that surrender value accretion came, which caused a fall in the stock. Close to 475, we added ICICI Pru, 550 was where we got HDFC Life, and we are adding. HDFC Life and ICICI Pru, SBI Life are a core constituent of our portfolio. And I think insurance is a no-brainer in the sense the growth in APE and this maybe 1 or 2 quarters can be a lag. But the underlying business is doing extremely well. And as new products come, their growth is inevitable. So if you have to see insurance, you have to look at the next 10, 20 years, where insurance is going to be a very key play. On the other part, I would also like to comment, even the RBI governor commented that 85% of Paytm users were Paytm, which had another bank. So 15% is what was left, and I think that will transition. I think their gross MPVs have bottomed out, and they could see strong accretion on their business model of lending. Now, all that is in this humdrum of what has taken place. But somewhere, I think at 400, it is a very, very good stock to buy with a longer term view. We also think that remedial measures, course corrections for a lot of the companies which have been pointed out by RBI may also be faster moving than before. And adherence to new governance will see bottoming out in the next quarter. On the last one which you suggested, against MGL, I have a buy on IGL, which is in our portfolio. We think IGL will come out with even more stellar numbers, and their business performance in Delhi and NCR and eastern region of UP has been very, very fast moving. And that is where they are saying that volumes are actually adding up and margins could be strong. So IGL is one stock to keep an eye on.
A lot of other stocks in focus as well. Interglobe Aviation, we had Gangwal offload quite a bit of stake in the block deal yesterday, Sanjeev. Then, of course, you've got AB Capital as well, although to comply with RBI norms, but the board has approved the merger of its arm AB Financials with itself to try and comply with the RBI norms. There's, of course, United Breweries as well this morning, and it seems that they've come out with a female version of Kingfisher beer, which is Queen Fisher as well. Bunch of these stocks. Anything that's looking interesting to you?
Yes, the Queen Fisher will do well. I don't drink, but it will add up to the revenues. And you know that millennial drinking has gathered steam. A very good way of marketing, I must say. We are bullish on United Spirits. United Brewery was much lower when we got in. We also like AB Capital. The transition move has been very swift. It is the holding company of the AIF, the mutual fund, and the distribution arm. And I think capital will get even more stronger for them after this base of merging one of the companies. On declines, you should add that. But for us, I think the key over here is that the broader market will be in a consolidation phase. So pick your stocks. Right now, like I told you, PSU, OMCs, ONGC, Hit Copper, Vedanta, this metal stroke OMC space is looking very, very strong, and insurance. So that is where you should be actually upping your ante.
Tobacco company obviously has a lot more stake, 25% stake. So this 4% isn't really meaningful. But would you say in the near term, the valuations have run up for ITC?
Well, Aisha, yes and no, both, because see, the market was disappointed with the demerger which they did. That was 10% of the hotel business, which contributes to just 10% of the revenue. On the other hand, bad selling a stake is a positive, I think, because as they reduce stake, then the demerger of the cigarette business is what is going to be key. That is going to be the mantra for ITC as it emerges as a powerhouse in the FMCG business. ITC now has almost 70% of its revenue or market share or profitability from the cigarette business, but the FMCG business is picking up very, very strongly. And if we see rural growth, the type of projects they have in Haryali and all, that could be a good offering. So Aisha, to sum it up, after this sale, I think at 400, the risk reward of being in ITC is very favorable. We are bullish on consumer stocks, particularly in the rural areas, like I've mentioned, Bata, Patanjali. I think ITC can be a clear fit over there on their expansion of FMCG, where margins will start to rise over the next 1 year.
Okay, fair enough. Meantime, let's also get in your take then as to how, Sanjeev, you're looking at this entire PSU rally, given the fact that now the view seems to be changing slightly, that at least when it comes to banks, it would be safer to look at some of the private sector banks. So the rally in the PSU banks has been quite heady. How are you approaching this space?
Well, I am also in that camp, and we have reduced exposure to PSU banks. We think the private banks is where you should be putting your money. ICICI, Axis, HDFC, Kotak, those are looking good. By the way, I have been suggesting AU Bank for the last few days. AU Bank hit a new 1 month higher, and I think AU Bank, given the feed which it has across Rajasthan, Maharashtra, and their CASA increasing over a period of time, AU Bank is giving a very good opportunity. So we have a buy. We had a buy around that 570, 565. This is one stock which I think can do well. And we are also in the camp where you should take money off PSU banks and put it into large cap private banks.
Right, Mr. Bhasin. I also want to know in terms of the QSR space, right? Whether you look at Westlife, Jubilant Foodwork. What's the outlook on that one as well? There were some concerns around the cheese that was factoring in. Today we have a note from JP Morgan on Westlife also, which has cut the target price for Westlife Foodworld by around 60 rupees as well. What is your view on any of these QSR names?
So, we are very bullish on Devyani. Devyani has gone through a transition. It has done an overseas acquisition, but their franchise is doing extremely well. Also, if you saw Costa Coffee and the likes, they are adding into more market share from Starbucks. And as an observer, as a traveler constantly on airports, you can see the advent of Costa Coffee. Aside from that, Pizza Hut, their other brands are doing very, very well. And I think if you have a slightly longer term view, QSR will be back with a bang. So Devyani is where I am putting my money, and I think that can be an outperformer from here over a period of time. As regards Westlife and Trent, I think valuations have reached a peak. There can be some profit booking, but these stocks have been have seen very, very sharp gains over the last 2 years. So profit booking there, then put your money in Devyani, which I think can be an outperformer in the next 6 to 9 months.
All right. Meantime, you've also got the entire cluster of paint stocks that are in the spotlight. Macquarie coming out with their report. They are an outperform rating on Asian Paints. For Kansai, they're maintaining a neutral rating, slashing the target price. And Berger, they've got an underperform rating, saying that as of now, Grassim's launch is not materially hurting Asian Paints. How are you looking at the entire space, Sanjiv, with now competitive intensity picking up?
Well, that is the key conundrum going through investors, because everyone wants to chase high beta and they are neglecting HDFC Bank and Asian Paints. We have actually upped our ante. We think both of these stocks are giving you a very good entry point, along with some of the cement players. Like I said, Ultratech, Ramco Cement, these whole basket of stocks which are dependent on input costs, particularly Asian Paints because of fall in crude, and cement stocks because of sharp fall in petcoke. Their margins could surprise on the uptime. Secondly, Avan, there are times when large cap, big wealth creators like HDFC and Asian go through a period of consolidation for whatever reasons. But the underlying asset remains the prima donna. Asian Paints and MRF have never diluted equity. Hence, the valuations look stretched. But I still think there is a little bit of a downside. Rather, upside could be much more once the market consolidate and you see real wealth getting created on the blue chip stocks. So HDFC, Asian Paint, do a sip. They can richly reward you in the next 1 year.
It's a clarion call for two of the large caps, HDFC Bank as well as Asian Paints. Sanjiv, good to have you on the show as always. We'll let you go on that note. But let's address some of the other